we can do is show you financial contracts and using economics, how you can create a world of safety with great returns and not have to sweat any of this. And this will happen again. Here's some other fat cat news. If any more proof is needed that the intersection between the government and the financial sector has become hopelessly convoluted, look no further than Aurora Bank. Until this thrift recently shed its name, a la AIG, which is still picking a new moniker, it was known as Lehman Brothers Bank. Oh, that's awesome. I mean, how crazy is that? One of the largest lenders was, it was like Aurora Mortgage Company, Aurora Lending Service. For a lot of rehab properties, I did loans through them myself. And, I mean, they're just going like default crazy as well. It's amazing when you look at this. It just keeps on going. And, Lehman Brothers Bank, I mean, they had the Prime Reserve Fund was the largest money market fund in America. The largest money market fund in America, owned by Lehman Brothers, went under last September. And, I have clients that had money in that money market, which you would think would be safe, but that money is not there. So where'd the money go? We're not quite sure, but I'm pretty sure Lehman Brothers is doing quite all right. And how about this stress test bargaining, dealing with the devil? WSJ reports that after intense bargaining, the Fed significantly scaled back its estimates for banks' capital shortfalls. Indicative of this was the unexpected change in its methodology for measuring bank capital. Instead of tangible common equity, the Fed used a less stringent measure it calls Tier 1 common capital. Whoa. So, here we got people doing this stress test, but they're changing what we all know the rules to be. That's not a good thing. That's not a good thing. So, that's really problematic when you start looking at changing the measurement systems and the measurement sticks. It's a bad thing. So, okay, where are we at today? The market's down 155 today. Here's what I want to tell you. There's a better way. I want you to call me at 720-279-6374. That's my phone here in Denver. Call me, 720-279-6374. Call me. Call me to learn about financial opportunities. Call to learn about business opportunities. Call to get coached. Call to get it taught. There's no fee to meet with me. I could charge you a lot of money. But no, what I want to do is teach you and coach you how to protect your money and your assets. Come on, get off the stick. You need to do something different. You need to do something different. Look at the credit card losses rise to 300%. This is from Daily Finance. Not a huge amount has been written about how much of a hit banks will take from charging off bad credit card loans. But the simple truth is that credit card loans are among the worst for banks, since there is nothing to seize as collateral if the buyer can't repay. So the people won't, and who don't repay, inspire banks to raise rates and fees on everyone else. Okay, producers, I got a ping timeout here. So I guess I got to reset. Is that to me, Steve? Do you know? And I got to believe, since it's on my screen, it's me. So I'm going to reset my screen here. So, it just goes on and on. I mean, it's like a never-ending trauma that we have happening here, that it won't end. And, we need to do something different. We need